But now we wait till we have product market fit. But the problem is, what is product market fit?
Welcome back, everybody, to the Revenue Problem Solvers podcast, where we try to crack the code on growing your business by tackling the challenges to keep revenue leaders up at night. I'm Carl Ortmans, and on today's episode, we're going to dive into the topic of launching a second product. Now, today's podcast is sponsored by the great people at Virtual Causeway. Traditional demand gen is breaking for a lot of teams, and we talk a lot about this on Revenue Problem Solvers. Virtual Causeway is actually going to help you fix that by shifting from demand generation to demand positioning. Instead of chasing form fills, they engineer where and how your brand appears when buyers research through AI tools and even through peer networks. The result: fewer cold motions, more high intent conversations, and revenue teams actually spend time with people who want to buy. Check them out at www.virtualcauseway.com and don't forget to mention the show for a special rate. Okay, before I say anything about this guest, because this person is somebody that I've followed and I've learned from afar, I should say, through podcasts, posts, and even his book. There's 3 simple words: repeatable, scalable, predictable. My guest today is one and only Mark Roberge. If you're in SaaS and you don't know who Mark is, you might be hiding under a rock. Mark has fundamentally shaped how modern revenue teams are built and how they scale. With an engineering degree from MIT, who joined as the number 4 employee at HubSpot to lead sales, he helped to grow the company from $0 to more than 100 million in recurring revenue. Oh, he also helped the company to IPO and became their first CRO. Using his background in engineering and product thinking, he built systems that scale. He wrote the book on how to build the most iconic go-to-market engine in SaaS history with his book, The Sales Acceleration Formula, which, in my view, is one of the most influential books written on building predictable revenue, and it's one that I read every 18 months. He's a lecturer at Harvard Business School, where he teaches the next generation of leaders how to design scalable, data-driven sales organizations. He's the co-founder and managing director at Stage 2 Capital, where he's partnering with founders to help them scale from early traction to repeatable growth. Oh, he also runs the Science of Scaling podcast, which has amazing guests, and it's chock full of learning. Mark, welcome to the podcast. It's an honor.
Jeez, Carl.
Thank you for having me.
Thank you so much. I get to bring you everywhere to intro me. I'm honored. Thank you so much. That's great.
Oh, it's my pleasure. There seems to be maybe a new path for me. I've had that a couple of times. Can you say this? Can you say this at my funeral or whatever? But
oh my gosh,
it's amazing.
That's great.
Thank you for doing this.
Yeah, it's an honor to be here.
To kick us off, could you share with the audience a little bit about your world? What context? So what industries or verticals do you work in? What are the selling motions? What size companies do you like to work with?
Yeah. So, first off, just the story behind each step there. None of that Carl talked about was intended or proactively pursued, which is just weird. But all like serendipitous and meant to be, I suppose. I just in my teenage years was just really good at math and ended up in engineering and ended up starting my career writing code, which led to a passion for entrepreneurship. And that was definitely proactive. Is I left my big company job at Accenture to join a startup. So that was definitely a proactive move. And then that one didn't do much, but I proactively went to business school. That's where I ended up at MIT. And then after that, it was just kind of like started a company and was like recruited into HubSpot when it was early, and was Brian Halligan moved me in to do sales for them early on. And then, was recruited into Harvard to teach, and then was approached to start this venture capital firm. Never really intended to write books either. And those just kind of like surfaced. So just like, so people know, these are all like somewhat like, they look like unrelatable experiences, but they've all gravitated up and form a foundation for, I suppose, the unique value that I'm always trying to reflect on and produce. And to Carl's point right now, I've landed myself as largely a venture capitalist today, and which again, not intended to go that direction. And we can talk about how I've implemented it. And then secondarily, as a faculty member at Harvard, teaching a couple classes there at the business school. So sorry for the long-winded answer, Carl, but like at Stage 2 Capital, our uniqueness is We are backed. Our capital providers are over 1,000 sales and marketing leaders from tech. So the sales and marketing leadership from all the companies that you've heard of, from Snowflake and Databricks and GitHub and LinkedIn and Salesforce and HubSpot and Workday, and we've got almost pretty much every category covered. And our unique contribution is to help aspiring entrepreneurs, once they hit product market fit, and we can talk about how we measure that, to help them build their first repeatable sales engine, Carl. So you can see the connections there. So we've been at it for 8 years. We're on our 4th fund now. We have about $500 million under management around. In each fund, we implement what they call a concentrated portfolio. So we're usually making about 20 investments. I would say each quarter we probably look at 500 companies and maybe invest in one. So that's just the business adventure. It's very competitive and looking at patterns, but we invest all over the world, across B2B software. So as long as you're scaling through a sales org or a PLG funnel, we work with folks. Usually they're in the mid 100,000s in revenue, perhaps like low millions in that arena.
Nice. Well, if you have the opportunity to work with Mark, if you can't tell from his background, you will be honored, and I'm sure he will help you deploy the best solution and engines out there with the rest of the team, because it's an incredible team.
Yeah.
So how we got to today's topic is, I asked Mark, I said, hey, Mark, like I ask everybody, what's a successful revenue initiative you ever led or an existing challenge? And he pretty quickly jumped and said, well, it's actually the challenge. I'm like, which challenge? He's like, it's launching a second act. Now, I think there's a lot to this one around launching a second act. It could be launching a new product, a new market. It could be launching whichever. But maybe the question to start us off to is, how come you pick this one to talk about today?
Yeah, it's just been, my first principle is I love entrepreneurship, and I'm also constantly reflecting on the unique gifts that I've been given. And for whatever reason, I've been given this unique gift of experience with go-to-market strategy and execution. And so that's just the way I frame my life right now professionally. Is I look for big platforms to help the entrepreneur ecosystem through my unique gift of go-to-market expertise. That's led me to teach to Harvard. That's led me to, be part of the, co-founder of Stage 2 Capital and build the platform we have. And in the last decade, since leaving HubSpot, I've had the luxury and blessing of seeing hundreds of startups a quarter. So just see a lot of patterns, and, some of them become unicorns and some of them go bankrupt. And it's put me in a position to be able to evaluate and reflect why. And so many of those reflections have come back to when the board and leadership team decided to scale revenue around a new product, and how fast. Whether that is like your first product, like your 2 co-founders burning one out, or whether you're an existing company that's going to launch a new product or expand your offering to drive revenue for the future. And that latter one we're talking about, it's the same concept. And I just think like that is such a critical strategic decision. And there is so little rigor done behind it. In a startup context, it's like, when do you decide to scale revenue? It's like when someone gives me Series A funding, or when I have 5 customers, or when I have $1 million in revenue, or like when I have product market fit, yet no one really knows what that is. It's like, it's absurd. And the pacing, it's literally like add a bunch of reps at the beginning of the fiscal year, add a bunch of reps right after a fundraise. When you kind of pull these back, you start to like realize how absurd those decisions are. And really that's been the last decade of my life, is trying to come up with and evangelize a framework, which I think we've had some great success with, that allows, boards and executives, when you launch a new product, to know when you're ready to scale revenue with it and how fast.
And you're one that is a big believer of saying, look, you don't go faster than you need to, right? You're not a growth at all costs. I think from a lot of the content you write is more of like grow smartly, sustainably, and reliably so that you can launch a new product or even
Yep.
in launch a new market, even scale. When you're talking to some of these founders and some of these, and you're working with some of these companies, do they ask you the question, hey, Mark, when should I scale? What are the signs? What is the impetus for a company to say, you know what, go launch into a new market? Or maybe the better question is, when do they know that they're ready for a second act?
Okay. Yeah, there's a couple of things you asked in there, Carl, around when are you ready for it, and are they asking like, am I ready to scale,
Hmm.
etc. And I would say on the like, let's start with let's like, when are you ready for a second act? One of the biggest mistakes that people make is they they go after too broad of a TAM,
Hmm.
TAM being total addressable market, out of the gate of a company. I'm going to exaggerate here, but like they try to sell, to the SMB, mid-market, and enterprise across North America, Europe, and Asia in industrials, finance, and healthcare. Like I'm exaggerating, right? But like it just shows the point that like you're going to get crushed if you do
Right.
that. You're going to boil the ocean. And the reason they don't do it to that degree, but I'm exaggerating. And the reason they do it is a lot of aspiring entrepreneurs want to raise capital from venture capitalists.
Hmm.
And venture capitalists, as an asset class, their job is to find billion-dollar companies. It's just the way the asset class works. And so they're constantly trying to make sure that this can become a billion-dollar company. And so the mismatch that occurs is, as a VC, you just need to believe that over a decade or 5 to 10 years, whatever, that this could become a billion-dollar company. But I don't need to like have proof that I have all the customers and all the segments out of the gate successful to show that. And in fact, like as you go from 0 to a million and a million to 10 and 10 to 100, you want to do that in the most predictable, low risk area, which is the opposite of selling across all 3 continents and all 3 company sizes and all 10 verticals. Right. So like that's step number one is like, yeah, you have to have a vision and story for the business if you want to raise venture capital to prove that this is a multi-billion-dollar business. But you don't need to start there in terms of where you target. Okay. So that's point number one.
Hmm.
All right. Point number two is, hey, you don't need to raise venture capital either. It sounds like a little like, hey, isn't that what you're selling? Well, not really. I'm just trying to like create a lot of value for the ecosystem. And if you have an awesome idea that's not right for venture capital, the worst thing I can do is try to give you money.
Hmm.
And people don't realize that there's plenty of other ways to capitalize your startup idea. And people also don't realize that more wealth is created in non-VC backed startups than VC backed startups.
Hmm.
It's just that like VC backed startups make the headlines, and that's what people think. So that's point number two is like, hey, there's this thing called capitalization opportunity fit, which is like you have a startup idea that's bringing a product to a market, and is VC even the right capitalization strategy for you? Right. So that's point number two. And then point number three that you're getting at, Carl, is like, okay, fine. Like, so you're following Mark's advice and you happen to have a startup that is VC backable and you do raise venture capital and you follow Mark's advice and you told the big story how you're going to be this $5 billion revenue business in 10 years. And you did a good job of going from 0 to a million in the SMB US market in tech. Now went really well. And then you went from 1 to 5 in the same market. And you're looking at this market and you're like largely selling through an SDR team, selling a small business tech with this cool product. And then one day you get to like whatever, 10 million,
Hmm.
and you're planning for 2026. And the board's like, let's grow 250% in, which happens, right? And like,
Yep.
okay, we're going to try to go from 10 to 25 million. And you're looking at the numbers and you're like, I got 12 SDRs, I got 8 account executives. I know pretty predictably like what everyone can produce.
Right.
Like I know my account executives are producing 800,000 in revenue. I know my SDRs are setting up this many meetings. And suddenly I realized that like I just can't go from 10 to 25 on this product in motion. I'm going to go from like 10 to 19, which is great. 10 million to 19. But it's just not what the top down charts say. So we can try to convince the board just to go from 10 to 19, which is a different story we can talk about. But what happens in the boardroom is like, I have an idea. We've always had this idea for this additional product. In fact, like all of our customers are saying, if we build this, they'll buy it. So why don't we just build this thing and sell it? And that'll get us the other 6 million. And so they're like, the board's like, that's a great idea. Right. And so then we're coming in, let's pretend this happened back in October as we're coming into the year.
Right.
So then they're like, okay, this is great. We're going to like double the size of the team, which gets us from 10 to 19 on the core product. And then we're going to build this new thing and everyone get to work. Like product, you start designing it, talk to folks, etc. Engineering, you start building it. Marketing, change the website, update all the materials. Sales, start getting all the sales discovery calls and the methodology, get the training going. Customer support, make sure you get your team ready to go for all the questions that come out. We're going to launch it at the June customer conference. And then like the June customer conference happens and it's like big, it's like the feature of the CEO keynote kicking off, etc. And like all the people come in and like they start asking for it. A bunch of people start trying it and then they don't use it. And now you've really hurt yourself because like you've taken probably 60% of your company from sales headcount to marketing headcount to engineering headcount and put it on this thing that didn't produce revenue. And the reason why it didn't is like, it's extremely rare that you come up with a product idea and it just works. Like that's a way we've advanced in the last 20 years in entrepreneurship is, go back to the beautiful work of the lean startup and Eric Ries, Steve Blank and his work. It's like, we have design partners. We usually, when we start with a product, we put out a minimal viable product and we work with the design partners and it's rarely perfect. And we tweak until we have supposed product market fit. And then we have to figure out how to message it and bring it out. And it's like, we're pretty good at that in the early stages when we start a business. I don't really see a lot of two-person founders being like, this is my idea and we're going to sell $5 million in revenue in the first year. They're usually like, give me some seed capital. Let me go through the motions of this stuff. I don't know if it's going to take a week, a month, a quarter, or 2 years. But then for some reason, when we get to like 10 million and we launch a new product, we forget all that. Right. So that's really what causes the issue, Carl. And we can certainly unpack all those milestones and signals, et cetera. But that's generally the boardroom discussion.
It's interesting. What comes to mind immediately is like, I don't always test my code, but when I do, it's in production. Like that's the very first thing that comes to mind. Like I'm just going to launch it and somebody's going to happen. Right.
Right.
If we go back a little bit, because I think the how I'm thinking about this is like the order of operations. I have a new thing. I want to bring it to market.
Yes.
Is the mistake or is the mistake, I'll say it this way, where companies try to go too big too fast versus like say, hey, look, I'm going to have a beta product and I'm going to launch it to, hey, these 5 customers, I'll go back a little bit. Sorry, let me pause. I'll kind of come back to it.
Yep.
Some of the groups that I've worked with, we have like these tools where all the data from sales is coming in and, hey, there's a feature set that we could really use with this company and that company wants to buy it, but we don't have it. And we log everything in a database, and the tool for today is escaping me. But we meet on a regular basis and say, hey, look, these are the top 5 things that are consistently being asked by our customers that if we had, they would expand. And so going back to it and go through it and say, hey, look, we could actually launch that number 1 thing. It's not going to take a lot of work. It'll take 25 hours of effort. We can do it. We'll launch a beta and we'll bring it only to these 10 customers. And so that's something that I've been familiar with. So is that maybe a miss, or is that maybe one of the challenges that companies try to go too fast and don't bring that MVP to a set number of customers? Say, look, this is a beta. You're the only ones that are going to have it. We need your feedback, but we want to see if this is even relevant before we bring it to market. Is that a miss for some that are trying to go too fast?
For the most part, like, we can unpack what it is. And I do want to root this in something that you've been saying too, Carl, is like, I'm not necessarily saying you should go slower. I would say, as I go talk to entrepreneurs on the speed spectrum, I would say probably 60% of them are probably going faster than they're capable of.
Mhm.
And I would say 40% of them are going too slow that they'll miss the window. Like, my work is not necessarily like go slower. My work is about go at the pace that you're capable of and increase that capability.
Hmm.
And for you to understand. Does that make sense, Carl? Like, because right now it's kind of like, I'm going to triple next year. Why? Because that's what people tell me I should do. And it should be, I'm going to triple next year because that's what I'm capable. That's the fastest I'm capable of going.
One of my one of my football coaches, it's a totally different thing,
Yeah.
but I think it's relevant. He always talked to us about focus and frequency. So how frequently can you be focused at the task at hand? And because their skills are meant to be focused on, and they have to be taught, and they have to be developed. So I've used that focus and frequency conversation for this, because, and maybe it's a good way of interjecting it. How focused can you be on a problem, and how frequently can you be focused on it? Because if that problem is big enough and you start to solve it, the frequency of how fast you want to go is translates into the adoption from the customers. And maybe I'm wrong.
I think there's something to that. I think there's something to that. Like, the focus and frequency. Let's try to back that into that. I think there's something to that. So, like, what we've established so far, and I think hopefully some people are connecting to it. Hopefully most people are not like, oh damn, we just launching that next month, and we signed up to 5 million in revenue for a product we haven't even launched. But that happens all the time.
Right.
In the new book, The Science of Scaling, I call that the second act stumble. All right. So like, so that's where we are. And Carl, you're kind of like, okay, well, what is the answer then? And the first answer is like, you don't ever want to be in a situation where you're committing to a revenue with a product that you haven't even launched yet, which means that at this point, as you go from 5 million to 10 million to 20 million to 50 million, you want to have an operating muscle where you're always running experiments to get products into a position that can be scaled. That's what great companies do. Is like, and hopefully at that point, you've got a little bit of disposable resources. In this case, product and engineering, maybe some designers, maybe you'll need some salespeople, et cetera, to be able to put out whatever 3 to 5 tests. That's the example you gave, Carl. I was like, hey, I think I can stand this up in 25 hours and we can have it into some MVPs. Like, you're getting into the motion that we want, but like, bottom line is we hopefully have some disposable resources such that we can run 3 to 5 experiments a year, and maybe one hits such that it is ready to scale. Okay. And so let's figure out what that looks like. Now, when I ask, like, when are you ready to scale a product? There is like a phrase I always hear. I don't want to put you on the spot, Carl.
Uh-oh.
But I always ask, like, the MBA students, okay, like, when are you ready to scale? Like, I mean, half of you in the class are aspiring entrepreneurs, you're building a product. Like, when are you ready to, like, say, this thing's ready, let's hire salespeople and commit to a revenue target? What do you think they say?
Well, when we have product market fit.
Yes, dude, A+.
Yes,
A+ in your Harvard exam. Yet, I think it's a great answer. And it's something that represents 20 years of progress we've made, because we used to sell vaporware in the 80s or 90s as entrepreneurs. But now we wait till we have product market fit. But the problem is, what is product market fit? Because there's probably like a 3-page Wikipedia page on it with everything from like, it's a feeling, which I don't love to like base corporate strategy on feelings, you know, like, how would you, so then I go to the students, I'm like, what is product market fit? And like, if you ask 100 entrepreneurs, you get 100 different answers. I know what you think about, Carl, like product market fit.
Well, I can already anticipate the question is going to be, well, it's a dollar amount or it's the number of customers using.
Yeah, I don't think it's either.
And
but that's right.
But it feels
like that's what most people think. You're right. You're right, Carl. That's exactly, you're perfectly like mind reading the MBA student or even founders. I just go out of like whatever Y Combinator or whatever, just do this to technical founders too, right? And like, oh, it's $1 million. When we have $1 million in revenue, we have product market fit. When we have 10 customers, we have product market fit. Like this is, in my opinion, market message fit. Like if someone buys your thing, I think conceptually product market fit means that you create a product with a value promise and it delivers that value. That's what product market fit is. When you sell someone, you haven't delivered the value. You just convince them. I look at that as market message fit. Like, Carl, if you and I claim that we're great salespeople, we might, through our Jedi techniques, be able to convince Eskimos to buy ice. But Eskimos don't need ice.
No.
It just means you're good at sales. Fine. You have a ton of inbound. You're seeing a lot of that in AI right now. It's like, there's so much. We just went from 0 to 10 to 100 million PLG. Everyone's downloading our stuff, but no one talks about the fact that half the people that downloaded it stopped using it. I don't think that's product. I think that's just great marketing. Right. So I think product market fit has to be rooted in the value result. How many of the people did you generate the value that they bought it for? And in our world of B2B software, that's often best quantified more around retention than it is sales. Okay. So I would say, like, if I look at a business, if they went from 0 to 10 to 100, I can't tell if they have product market fit. But if they've been in business for 2 years and all of their customers who are over a year old, their net dollar retention is 130%. And their gross retention is 92%, I'm waving the success flag on product market fit.
Yeah.
Now, the problem is, like, when we're bringing a new product to market, like we're talking about here, Carl, we can't wait a year to decide for like the retention. So we have to define what we call a leading indicator of retention. And so that is like, what can we see in the first month? So a customer buys. What can we see in the first month that will have a high probability, if it occurs, that they will retain, that they will expand, that they will see the value? And so I call that the lead indicator of retention. And that's one of those cool things that there's no universal right answer. It's one of those cool entrepreneurial things that you have to kind of bring your creative juices to it to define. But I think it's one of the most important things you need to define for your business, whether you're 2 founders bringing a product to market or whether you're a $100 million business bringing a new product to market. And so I look at it as P% of customers do E-event every T time. So 3 variables. Carl, you've known my work for a while. You know, I always like create these formulas. Hopefully they're not too, I don't think that's that complicated. P% of customer do E-event every T time. It's just three variables. But let's talk about in like real human language here, right? So like a lot of us use Slack. Slack has a very famously documented 80% of customers send 2,000 Slacks every month. I think that's great, Carl. Like, imagine if the founding team of Slack, they were like, okay, we built this MVP and our first goal is to get to $1 million in revenue. Versus if they were like, hey, we built this MVP and our first goal is to get 80% of our customers to send 2,000 Slacks every month. I just think that's a better measure of product market fit and a better foundation for a business and a better foundation to know that you're ready to scale.
And it seems like you're more toward, well, it would translate to the usage, right? And I think in, I don't want to get tested here, but something, if I'll try to remember it, but in sales acceleration forum, you talked about, I think it was like, if they took certain actions by day 12, you could categorically say customer or no customer. So you looked, I think you looked at it from a path of like, are you doing a thing so that I'm
Yes.
showing you that there's a value that I
Yes.
can now say high intent to customer, or you know what,
Yes.
you haven't done a thing. Hey team, leave them alone. Just let them go on their own journey. Spend time over here.
Such a great way to connect historic work that I didn't invent in revenue prediction and forecasting to these principles of product market fit. You're exactly right, Carl. Is for decades in sales, we have created pipelines and stages of a sales funnel and forecasts. And we've done things like if I give a demo, this result. If I summarize a need profile and they confirm, then I can move it to a stage and I can move it to a forecast, and it's predicting success.
Mm-hmm.
And this is the same principle post sale, because especially in this day and age, like the actual customer sale shouldn't happen at the signature and the time when they adopt the product, they decide to buy it.
Mm-hmm.
It happens when they see the value you promise them.
Mm-hmm.
And, I actually never really connected it through that analogy, but I think it's great for your podcast, Carl, which is like, if you look at that holistically, where the endpoint is the value creation and the retention and expansion,
Mm-hmm.
then the definition of this lead indicator retention and the achievement of it is no different than how we've been doing this in decades in the sales funnel around customer need validation, et cetera.
And we now have more tools and abilities to determine signals faster than we've ever been able to do it, which
In on-prem, yeah, exactly. Like you
Yeah.
couldn't like tap into the customer's local area network every day, right? So,
Right.
but because this is cloud-based and we move into the AI era, et cetera, the stuff's so easily trackable, and you need to be on top of it.
Can I ask a question
Yeah.
around the setup? Because I know I'm looking at the time, and I'd like to ask this before we run out of time
let's go.
from
Yeah.
you. Is once you make the decision to say we're gonna launch the second act, we're gonna do it.
Yes.
Is there do you advise team to say, here's for sake of this discussion, we're calling it Delta team. We're gonna have one product, we're gonna have one marketing person, we're gonna have one engineer, we're gonna have one salesperson, one SDR. Do you streamline that group of people that are going to be working on that, or do you say, look, I'm going to leave the salespeople alone today, I'm going to bring new people in that can help to translate and go after that new market, because I don't want to lose the momentum of my current team, because I then have to start over for somebody new and I got to backfill their quota. How would you advise somebody on launch a new product, but is it a Delta team? Is it a smaller team?
Yes.
Or is it a new team?
All of it.
All of it.
It's a new, smaller team. It's a new, smaller Delta team. Okay, so it's a really good point, Carl. And I need to give credit where credit's due as I bring in various people's frameworks. We've talked about Eric recently in startups. So let's just fast forward to where we are. Okay. We've done a great job. 0, 1, 5, 10 million, right? We're trying to go from 10 to 25 now. Our existing product market channel combinations only getting us to 19. So we need to find another 6. So don't fall in a trap of creating a new product and committing to a revenue target before you even have gone through the sequences to know that it works, etc. Instead, make sure that as you're scaling up, you're building the operational cadence to running experiments, looking for new expansion unlock. You might be running 2, 3, 4, 5 at a time. You usually just need to unlock one and it's ready to scale. And we've talked about the first stage of 2 stages that knows that's ready to scale. Carl got the meme right, which is product market fit, but don't fall for the fluff of like what product market fit is. It's around the definition of a lead indicator retention. So now we've done we're doing 3 experiments. We're trying to get one of them to product market fit as defined by the lead indicator of retention. I don't know if I went too fast there, Carl, but we kind of summarized it.
With you.
And Carl is asking, well, how do I do that? How do I staff that? And you're absolutely right. You want a separate team, because in this, I'll quote the work of Michael Tushman, another Harvard Business School professor. If you Google his name, an ambidextrous organization. That's the way he frames it. And ambidextrous is, as you use your right hand and left hand equally. And the analogy he's making is exploit and explore. So you're exploiting the known and exploring the new. Okay. So in our case, we have this product market channel combo that got us to 10 million. We know we can get to 19. That team cannot be distracted. Keep that going. Keep those SDRs going. Keep those account executives going. Keep those application engineers on that. Let's scale that business. And then we have to explore the new. So we have 2 or 3 product ideas. We need to explore that. We cannot contaminate and distract those folks. We want to keep as few brains as possible so they can see the pattern recognition. Now, how specifically you staff that depends on your resource availability, the actual product, but we can make it up and say we're going to have 1 full stack engineer with a designer, maybe a PM, 1 customer success person. Maybe you can have a seller in there too. That gets to be a little heavy. But like at the very least, you have an engineer and a PM, something like that, right? So you want to keep them separate so they can be thinking about this all day. And that's where like the availability of discretionary resources are necessary.
Okay. Which makes a lot of sense. And especially if you're trying to build in the number, because if you take one of your top reps out of it, well, now I know that number is guaranteed. I just lost it. And even to backfill, I'm by the time I get somebody in, I'm going to get 4 or 5 months of productivity. So I've shot myself in the foot.
And that's the other part where like we're talking about this new book called The Science of Scaling that has been the work of this 10 years. The other aspect of that is like we define a go-to-market system of how do we create demand? What's the ideal rep hire? What's the methodology we follow? How do I pay our reps? How do we coach our reps? How do we price the product? How do we run the forecast? The go-to-market system components change as we go from product market fit to the next phase, to the scale-up phase. And Carl just said, well, if I pull my top rep out, I lose all that revenue. Guess what? Usually, rarely is your top rep the right first rep
yes,
for that skunk team.
Right.
Because the top rep, like, when they showed up, they were like, okay, what's my commission plan? Where's the pitch deck? How do I handle objections? Who's my manager? What's my territory? Let me go make a lot of money.
Right.
Terrible first hire.
Yeah.
Like the first hire needs to be like curious and talk to engineers and like summarize the last week of feedback. So that's the other wrinkle in this is not only can we be super calculated in the phases we go through to bring a product to market, but we can also be super prescriptive in how the go-to-market system alters as we go through those stages.
And that's one of the big trade-offs. When you bring the skunk team in, you bring in new, and I'm glad that you said it, because I was going to ask that the next question is, what are the skill sets of the people that come into that new team? And those are the more entrepreneurial, like, hey, look, you know what? Don't worry about giving me like, it has to go this way. I'll figure it out. I'm that figure it out person. I'm going to help you. Once those people move into, and I've seen this in some of the organizations where they were the first hire and they were able to figure it out. They knew the systems well enough, but then the structure came on for the scaling and they're like, whoa, I don't like this.
I hate this, Carl. I miss the days when I sat next to the founder and we went to coffee and jammed about what it could be. Now I feel like I'm in the factory. Yeah. I live on the 3rd floor now. I haven't seen the founder in 3 weeks. I miss the old days.
Yeah. Why can't I just ask him for a discount? Why can't I just price it whatever I want? Well, hold on a second, right?
Yeah.
And so I'm glad that we pulled that out, because when we start to look at the skill sets of the people, you need to figure it out, because you don't know what that next one's going to be. If you jam them into a box and say, look, this is what it's looking like in HubSpot or in Salesforce, and you have to thou shalt, that's not going to work. It's the entrepreneur on the beginning to go, who are the people? What is this going to look like? Are we even saying the right thing? Because that new team, if you take an existing team, this is my opinion, if you take an existing team and you try to put in something new, you have to relearn. They basically have to relearn bad habits, because you just brought them to new habits on that scaling. Now in the growth phase, totally different of like, I have to talk to these people and these titles. Maybe we would have overlooked them because we didn't actually know that a sales manager in this vertical, what actually meant like more of like a CRO. But on this side, I want to go to the CRO. The levels are different. And so all of that lessons learned are things that I've seen personally, and I'm glad that we were able to talk through it today, because I think that that's a miss for some. And I'm glad that, you know, the way that you say it is way more eloquent than anything I'll ever say. But the skill sets and the focus are 2 key things on bringing a product, and that's what I've taken about.
But you see it and you say it in your words, and that's just beautiful. And that's really, you know, just to capstone it here as we transition to your next question, Carl.
Yeah.
The new book, The Science of Scaling. By the way, 100% of the proceeds are donated to mental health. So I'm on this mission to not only help organizations scale more successfully, but also the proceeds of like hopefully a societal benefit as well.
Mm.
And just to capstone it, as we think about bringing these stuff to scale, you have to first find product market fit, which you've defined as the lead indicator of retention. We didn't get to talk too much about the second step, which is go to market fit, but I think a lot of the people can conceptualize it, which is
Right.
just because everybody's seeing value doesn't mean you can just like scale up an org. We need a sales process. We need a demand gen strategy. How do you price this thing? How are we going to comp our reps? That all comes up in go to market fit, but shouldn't be addressed in the product market fit. And once you have the two of those in sequence, now you're ready to grow. And I think the last principle we talked about is there's a go-to-market system underneath all this in terms of who are you hiring as reps, how we creating demand, how we pricing, how we comping, and what's our sales methodology. Each of those changes as we go through each phase. And I detail out each of those elements, like what we talked about today, Carl.
Right.
Like, who is that first sales hire? What do they look like? How do I interview them? It's all in the book. It all helps with scale. It all goes toward mental health. So that is the overarching summary.
It's amazing. Well, I typically like to ask people towards the wrap up of like, hey, everybody likes new, nobody likes different. When you do both at the same time, it can cause friction or uncertainty. So
Yeah.
I think because I'll ask for somebody thinking about, leveling up their team of launching a new product and bringing it to market. What are 2 or 3 actionable things? And I think you said it is like, find your product market fit to define it.
Yes.
Think about your sales team of who the people are. And then your growth levers come back to the indicator of retention, and that's ready for scale. I don't know if I've captured those 3.
I think you're close. They're so close there. I think it's this. As we're talking about the scale up, make sure that you are running experiments for new growth levers. Don't get yourself in a position where you have to commit to a revenue target for a product that doesn't exist. Okay. And then once you have those experiments defined, run an explore and exploit structure where you have a whole bunch of your team just scaling up what you know, and you're running an explore structure on these experiments. And those are defined by product market fit first, go to market fit second, and then it's ready to scale. And make sure that you are adapting the underlying go to market system. Who's working on this? How are they working on it as you go through those phases? You said it pretty close to that, but that's how I'd say it, Carl. If that makes sense for you.
Yeah, you say it way better than I could. You're more eloquent.
But dude, I do this all day. You got all your other stuff going on, so like I can't say your stuff as easy as you can. So,
Mark, if people want to learn a little bit more, where can people find you?
Yeah, you can snap up the LinkedIn. I'm very active on there. It's where I do a lot of my posting. Obviously, I know I have a podcast, YouTube channel, all the other places. I guess I'm trying to do TikTok too for the next generation. Someone reach out to me and help me. I don't know do I really have to do all these crazy Hollywood things? I don't know, but LinkedIn's probably the best place to come find me.
And the other thing too is you got the new book, and I can't tell you how excited I am for this.
Yeah, it comes out on February 3rd. These days, I guess, is all about pre-orders. So I appreciate, for the goodness of scale and mental health, if you want to throw some pre-orders in there, that would be much appreciated. I know Carl's already supported us. I appreciate the platform here, and I'm excited for you all to read it and give me feedback on it.
Yeah, if it's anything like the first one, I think I've purchased 50 or more of your first book. Out of pocket, those are ones that I've not. But I'm such a believer in it. Mark, if I can, before we go, I think I'd be remiss if I didn't share my appreciation to you. This is the first time we've ever spoken, and well, I've been, if I can say, a fan. The Sales Acceleration Formula has been one of the books that I've given to leaders. I think I said I've purchased more than 50 to people that have reported to me, and it's the first one I suggest to any new leader. Read it, understand it, get your frameworks. I've stolen shamelessly your frameworks and adapted them as my own to fit the business I've worked for. Your content is one that I regularly read and review for inspiration on solving hard problems. I do think the world of you, and I'm incredibly honored that you sat with and chat with me today. Thank you for all you've done to continue to push the go-to-market profession. Your content is highly actionable, and I can't wait to read The Science of Scaling.
Jeez, Carl. That is so kind. I wasn't expecting that today, and it means a lot to me. As I mentioned, like, it really is just about pushing it out there, and I'm glad it has resonated with you, and you've pushed it out to all the different ecosystems that you're connected with. So I'm honored and humbled that you've done that, and I appreciate those kind words.
It's been a pleasure, sir. Well, that's going to wrap up another episode of the Revenue Problem Solvers podcast. I want to thank you, Mark, for sharing these invaluable insights. And there's some strategy you can implement today. Remember, success leaves clues, and every revenue problem has a solution. Sometimes you just need the right conversation to find it. Until next time, it's Carl with Revenue Problem Solvers, helping you turn your obstacles into opportunities. Thanks for investing your time with us today. We'll see you on the next episode.